Hello, everyone. Welcome back to Current Economy and Investment Insights. Today is August 17, 2020. And of course, we have Paul Munichel with us from Ameriprise Financial. And Paul's going to give us what took place last week. And then after you're done, Paul, I'll give the year-to-date status and anything new that Ameriprise had passed on to us to share with the viewers.
Great. Thanks, Ron. Let's talk about earnings season today, and I'll give you a bit of an update on what's been going on. Through last Friday, 463, or about 92%, of the S&P 500 companies had reported their Q2 financial results. Through aggregate sales and earnings were understandably down substantially for the period. The results were not as bad, though, as expected. There are still a number of high-profile companies to report their results. This week, the calendar is dominated by some of the nation's largest retailers, a sector that has experienced amongst the greatest disruption in business over the last several months. As such, final results for the S&P 500 as a whole could yet see some more downside. Earnings per share for the aggregate index are currently forecast to be down 34% versus year-ago levels, while sales are seen as dropping about 9%. At quarter end, earnings per share for Q2 were forecast to be $23.23, or down 44% from a year-ago levels. Despite a lack of guidance, analyst estimates have been trending higher from a low of 124.68. Full-year EPS estimates have been slowly rising in recent weeks. As of Friday, full-year estimates for the index stood at 129.45, or down about 21% from year-ago levels.
Wow. Okay. I'm saying, wow, that's an interesting report that you gave.
Yeah, definitely. It's shockers from last year's numbers, to say the least.
Yeah.
And a lot of companies aren't giving, projections or forecasts. So you really don't know what to expect other than they're probably going to be down.
Ameriprise, as I had mentioned earlier, had given us last-minute information as of this morning. And we're going to share this with you as domestic stocks are higher ahead of the open as investors await developments on the 10-year round of fiscal stimulus. And that seems to be bouncing around as to who's going to do what and when.
Exactly. The stimulus is something that all Americans seem to want for the most part. Congress just needs to provide it, and they're just haggling on how much to provide. They're all in agreement on providing something. It's just the dollar amount they can't agree upon.
Not only do Americans want that, they need it. There's many, many people that are in real dire need. The yield on the 10-year Treasury is lower to near 0.65% as gold rebounds from last week's 4.5% decline. Anything you want to add to that, Paul?
No, a lot of people watch that 10-year yield for mortgage rates and interest rates, and that's something actually we're going to talk about in the second half of the show today.
Excellent. And the Shanghai Composite gained 2.3% overnight after the People's Bank of China supplied liquidity to commercial lenders in the country. And then there's a little piece of information about, and I'm sure most people don't even know what I'm talking about. Sanofi announced plans to buy U.S. biotech firm Principia Biopharma for $100 per share in cash, or $3.7 billion. Now, if you're an investor and you're very active, that would be of interest. Most mid-range investors are really, this doesn't mean anything to them, but I'm going to give you some year-to-date. S&P 500 is up plus 5.65%, and Dow Jones year-to-date a minus 0.68%, and NASDAQ still is at plus year-to-date 23.60%.
We're getting close to getting all three major indexes positive. If we can get the Dow up a little bit this week, by next week's show, we might have three positive indexes for the year.
Very good, very possible. Well, we are going to be going on to our next show. Stay with us. Your Money. And Paul has a very, very interesting topic for most people who have mortgages. Should you refinance? And we'll have Paul give us some guidance on it. Stay with us. We'll be right back. Thank you for staying with us. We're back with Your Money, and Paul has an interesting topic talking about refinancing your mortgage. And Paul, I'm going to let you take it from there because I know not everyone should take advantage of it because there's a low rate. May not be to their advantage, and I'll let you take it from there.
Thanks, Ron. That is a question I've been getting a lot lately. Is now a good time to refinance? So let's dive right into it. Most of us are aware that interest rates recently have hit all-time lows as the Federal Reserve made cuts to mitigate the financial impacts of COVID-19. If you're a homeowner with a monthly mortgage payment, you might be wondering if now is a good time to refinance. While a lower interest rate may yield more affordable monthly payments, there are other factors to consider, and we're going to go over a few questions you should ask yourself before you make the decision to refinance. So, number one, will you qualify for a better rate? This one's pretty straightforward. The best interest rates are reserved for borrowers with optimal credit. If you are one of the millions of Americans who has filed for unemployment benefits during the COVID-19 outbreak, your employment status is not included in your credit report. However, your credit score can be affected by many factors, such as if you suddenly carry more credit card debt, have missed or made late payments, or have applied for new credit during this challenging time. Question number two, what will your new loan cost? Lower interest rate and lower monthly payments do not always add up to savings in the long run. Your loan will have closing costs and fees. Factor in prepayment penalties if applicable. Costs often vary by vendor, so it may be a good idea to shop around for the best rate. Talk to your financial advisor for a reference, one of the many online calculators to help you determine the break-even period or how long it will take before you realize the savings on that new loan. Question number three, do you plan to move in the next 5 years? The value of refinancing can be diminished when you exit a new loan before you've had the chance to recoup closing costs and fees. Number four, will your new loan eliminate lender insurance? If your home's market value has increased enough to grow your equity, refinancing with a conventional mortgage can potentially remove mortgage insurance, PMI, much sooner. Federal Housing Administration, or FHA, loans require mortgage insurance regardless of equity. Question five, are you trying to get out of an adjustable rate mortgage, otherwise known as an ARM? Switching from an ARM to a fixed rate mortgage can mean more predictable monthly payments, if that's something you're interested in. Question number six, are you seeking a new term length? A shorter term loan may offer better rates, but it could mean a higher monthly payment. If your income is threatened by the current situation, this may not be a good time to increase your monthly obligations. On the flip side, you may want to lower payments that come with a longer term loan. Although it's important to note you will have to make those payments for many more years, incurring greater expense and reducing your ability to save. And the last question I have that you should ask yourself is question number seven, can you afford your current home? If you're having trouble making your loan payments, refinancing is not the only way to find relief. As an alternative to refinancing a house you're struggling to afford, you might explore downsizing to a property with a mortgage your budget can better handle. You know, these are very uncertain times, and these are just some general points to consider As always, we do recommend you talk to a financial advisor before you take any action. Talk to your trusted mortgage advisor as well so you can make an informed decision before you do anything.
And what you could do is maybe get some quotes from 2 or 3 different financial firms that offer lower mortgages, lower rate mortgages, and then share them what the costs are with your financial advisor. And now you got some facts
Absolutely.
to make decisions on.
Yep, absolutely. And if you don't have an advisor you're working with, or you've just got some questions you'd like to bounce off someone, feel free to always give me a call directly at 708-226-3412.
Good, very good, Paul. Thank you for bringing that topic up. For Paul Munico with Ameriprise Financial, myself, Ron Jankowski with Channel 4 and Pale Sites, we wish you good investment day.